Hey, what's up everybody? Thursday, December 19th. Next week is Christmas. Sunday is Hanukkah. Alright, we got the holidays coming up. And let me remind you that you still have time to sign up for a 30-day free trial and lock in your $250 a month subscription rate to my report, MMT Trader. I am the only one that has an applied approach to MMT. I take the concepts and understandings of MMT and I use them to trade and invest in the markets. Let's talk about the stock market right now, where and I alluded to this. I talked about this in my last video. There has been a very stark reversal in market sentiment in a very short period of time. Just a few weeks ago, I mean, all the headlines were doom and gloom and everything was horrible and people were expecting a market crash for whatever reason, a trade war, the repo situation, you name it. But now bullish sentiment has really shot up. In the latest AAII, that's the American Association of Individual Investors weekly sentiment, bullish sentiment is now the highest it has been since October 2018, October of last year. Bearish sentiment is the lowest it has been since April of this year. What's interesting about those dates is that both of those dates, October 2018 and April 2019, preceded big market corrections. Now last year in October, we know that in November and December we had a big market correction. Very big, man. That was, in that period, that November and December, I was telling you people, you got to buy into that. You have to buy into that. It was a big correction. It was a gift. If you bought into that and held on, you would have made a lot of money. And I gave reasons for that at the time. There was nothing wrong with the economy. The trade war hysteria was overblown. We saw credit demand not only hitting new highs, but accelerating at the same time. Fiscal support at record levels. So all of these things were true at the time, and I had said it was a fantastic opportunity to be buying into the stock market. But nonetheless, we had a big correction. When bullish sentiment got too elevated, that made the market ripe for a pullback. And the same thing in April. We didn't have the same magnitude of a correction in April, but we had very low level of bearish sentiment. The market corrected, it was about 5 or 6% in May. And so that was an opportunity not just to buy on that dip, but had you been short or raised cash before that, that was a wise move. So we're in the same sort of scenario right now. One thing interesting I have to point out in that AAII weekly sentiment survey, that the level of neutrals, that means people who are not committed to the market, kind of sitting on the fence, that still remains very high. As a matter of fact, for the entirety of this year, the neutral reading has been well above the historical average. I really can't point to any particular reason why. Just there's a lot of people who are skeptical and they're sitting on the fence. I think that means ultimately we are going to see the stock market at much, much higher levels, where at some point it's going to draw these neutrals off the fence. People are just going to say they're going to be watching it and watching it and watching it go up to the point where they're finally going to throw in the towel and capitulate and say, I can't take it anymore, I'm going to buy this market. That might represent a very interesting and important top when that happens. And who knows, if that coincides with something fiscal, maybe it comes after the 2020 election, I don't know. If that coincides with something of that nature, wow, that would be an incredible selling opportunity. But that's not here right now. Of course, it could go the other way. The neutrals could come off the fence if the market goes down. We haven't really seen that in prior corrections. They come off a little bit, but it still remains elevated. So that neutral reading is key. And I really think that ultimately what it's telling us is that the market is going to go much, much higher, and those people, to the point where those people are finally drawn off get off the fence and they're going to come into the market. But right now the bullish reading is at the highest level in 14 months. The bearish reading is at the lowest level in 8 months. And so these are conditions that normally would suggest some kind of a pullback. And I hope there is one. I hope there is one to shake out some of this bullish optimism. I hope the headlines start getting real negative again. That would be a great opportunity. The fiscal situation remains unchanged. Record amount of fiscal support. So, I mean, you can't be negative on the economy with that happening. It's just too much money being pumped in by government spending. So that's the situation right now. We'll see how it plays out. I think the risk of a pullback here has grown, I wouldn't say, I mean, you know, fairly significantly compared to a few weeks or certainly a few months ago. So we'll see what happens. Anyway, that's it for today. Remember, go to my website, pitbulleconomics.com. Lock in your $250 a month rate for MMT Trader. I'm the only one who has an applied approach to MMT. I use the concepts and understandings of MMT to invest and trade in the market. The price will be going up on January 1st to $395 a month. So you have a big savings right now if you go to my website and sign up. All right, everybody. See you tomorrow. Bye-bye.